Okay. Hello everyone. In today's lesson, what we are going to discuss are few exercises, few questions from the lesson that we discussed previously. So, what was our last lesson that we did? Marginal and absorption costing. Previously, we discussed what exactly is marginal and absorption costing. What are the things that we need to consider when we are preparing accounts under marginal and absorption costing techniques? And also, what are the differences between these two methods? Likewise, we discussed a few things about the theoretical background and few things about these two techniques. So now in today's lecture, we are going to do a few exercises so you all can get a proper idea about marginal and absorption costing. So we will do a few questions. I want you all to read the first question number 1. So in this exercise, we are going to prepare the marginal costing income statement and absorption costing income statement. Just take a few minutes and read this question. I hope that most of you all have done maybe commerce during your O levels and your A levels. So you all know what an income statement is, right? In an income statement, we show uh, income and expenses. We deduct all the expenses from the income that we get, and we are checking whether we have profits or losses using the income statement, right? So there are different types of incomes as well as there are different types of expenses, right? So normally in the structure, what we do is, what do? We take sales, then we add if there are any other income, then we deduct cost of goods sold, the cost that we incurred to produce the goods that we sold, not the goods that we produce. Remember, we are finding out the cost of the goods that we sold, right? Then after that, what do? We deduct all the other expenses like administration, finance expenses, um, selling expenses, distribution expenses, likewise. We deduct these expenses and find the net profit. So that is what we normally call as an income statement. Okay, now just read this. Do not do anything. Now, this is the first question that we discuss. So I will do this for y'all. Just check how I'm teaching, and then you can try the next question by yourselves. Now take a few minutes and read this question first. Okay, now shall we read this question? Using the following data for the year 2020 for mega enterprise, prepare a marginal costing income statement and an absorption costing income statement. So we are supposed to prepare the income statements using both techniques. Okay, let's read out sales. How much sales? Remember the question is given in thousands. So you can prepare either this answer in thousands, or you can insert these three zeros at the end of all values whenever you are preparing the answers. But my advice to you is, if all the details are given in thousands, then no need to convert it back into uh, adding three zeros there, right? Okay. So we have sales 4,000. So variable selling expenses 400. Then fixed selling expenses again 400. Fixed administration expenses 100. Variable administration expenses 300. Fixed factory overheads 300. Variable factory overheads 200. Direct labor 300, 700, sorry. Direct material 1,200. And in the question it's given that this mega enterprise produces 1,000 units in the year 2020. And also they have given us the closing stock as 100 units, and there are no opening stocks. Now I will prepare this question in an Excel sheet. So you all can take your pen and paper and try to um, solve this question with me, right? Okay, for my convenience, I actually inserted the question here in the Excel sheet. And also, since it will consume a lot of time for me to input these data, the sales, variable cost likewise, and to draw these income statements, I already drew this. So now we just have to discuss the answer. So these two are formats or structures that we can use to find the profits, right? Are the structures of income statement. Like I said, we have sales, then cost of goods sold, then we have gross profit, and then any other expenses, right? Now let's see in the question, what are the sales that are given here? 4,000, right? So, and one more thing that you all have to remember is, if you are preparing the question or the answer uh, in thousands, hundreds, or millions, you have to show it here, right? If it's million, then you can write MN. If it's billion, BN. Hundreds, again, two zeros. Likewise. Okay. Now sales, we put the value 4,000. Next, in the question, what we are going to do is, we need to find the cost of goods sold. Now here, I forgot to mention both structures are here. So first we will get the marginal costing method structure. We will get the answer using marginal costing method. So what did we learn in our lesson? We learned that in marginal costing, we consider only variable costs whenever we are calculating cost of goods sold, right? Because we are supposed to find the contribution, or sales minus variable cost, right? So always first we should give priority to variable costs, like we have shown here. So we have sales minus variable cost of goods sold. Remember, this is not the total cost of goods sold, just the variable part of that cost of goods sold, right? So normally, how do we find the cost of goods sold? What is the formula we follow? This is the formula: opening stock, and if there are any purchases, we add it and we deduct closing stock, right? Here, what are the purchases that we have? We have direct material and direct labor also we are paying amounts, and these are directly attributable to our production, right? And remember, here in this part, we are solving the variable, we are finding the variable cost of goods sold. So now let's find out the variable cost of goods sold. Here in the question, do we have any opening stock? No. They say no opening cost. So you can put it like this. Then next, we have to find the variable production cost, right? So in production, what are the variable costs that incur? We discussed these, okay? Go to the tut last week that we discussed there what are the things that we need to consider. So we need to consider direct material, direct labor, and if there are any other variable factory overheads, then again we have to take that value as well. We should consider it as a cost. Now let's find out the variable production cost. So direct material, they have given us the direct material cost, right? Yes, 1,200. So you just can put it here. Why have I shown like this? Let me explain. Now, in a marginal costing method, or whether it's absorption costing method, in order for us to find the value of the closing stock, if they have given only the number of units in the question, right? They have given the number of units, not the value itself, right? So what do we need to do? We need to find the value of these closing stocks, right? So for us to find the value of these closing stocks, we need to find the per unit production cost, right? Now here they have given us the total values: direct material, direct labor, variable factory overheads, likewise, total costs they have given. So now it's up to us to find the per unit costs. Now go to your workings. So separately write workings. Let's find out direct material cost. What is the direct material cost per unit? Okay, now we are finding per unit costs here because after this, when we are finding the value of the closing stock, we need per unit cost. So material, direct material is 1,200. 1,200. We need to divide by the number of units that we produce. Then we can get the per unit material cost. That will be 1.2. Right? So just keep this in workings because we need these values in the future. Next one. Next, we'll take direct labor, right? Go to your question, direct labor, we have 700. Now find the per unit cost, per unit direct labor cost. Per unit direct labor cost is how much? If the total is 700 for 1,000 units, remember this is 700,000, okay, because we are preparing the question in thousands now, right? So since we are preparing the question in thousands, we will keep it as this. So 700 divided by 1,000. So per unit, you have to incur 0.7 rupees, right? So we showed direct labor. Next one, variable factory overheads. Variable factory overheads. Let's go to our question. Variable factory overheads, how much? 200, right? 200. Now let's find out the per unit variable factory overhead cost. So variable overheads, how much? That is 200. We have to divide it by the number of units that we produce, that the mega company enterprise produce. So 200 divided by 1000 will give you 0.2 per unit. Now we found per unit cost. How much is the per unit cost? You need to add all these three per unit costs, right? 3 per unit production costs. 1.2 plus 0.7 plus 0.2. That is how much? What is the per unit cost? 2.1, right? We added all these per unit costs and got the value. Is it clear? I hope it's clear to you all. Okay, next. Now we are supposed to find the value of the closing stock. So how many units are remaining? Right? Now let's find out the value of the closing stock. We have 100 units remaining. So 100 into 2.1 is 210. We have 2.1 per unit cost. See, we receive per unit cost like this. You can take down these notes, right? Then we found the value of the closing stock. Now here, we only took the costs that are attributable to the production because we wanted to find out the cost of goods sold. So remember here, closing stocks, you have to deduct. Therefore, is it the contribution that we get after deducting sales from variable cost of goods sold and variable production cost? No, right? That will be production contribution. That's not the total contribution where we obtain the value by deducting variable costs by sales. Here we are deducting variable production costs only. Therefore, now take the value here, 1,890. Remember, we need to add these costs and deduct the value of the closing stock. So why do we deduct the value of the closing stock? Because we have not sold that amount. We have that number of units, 100 units, unsold. Therefore, we cannot take the cost incurred to produce those products, right? Because that's not a cost of goods sold. We should get the cost of goods that we sold, not the remaining ones without selling. Okay, now take the production contribution. 4,000. Sorry. You need to get the production contribution equal mark 4,000 minus cost of goods sold will be 1,890. Right? So we had the production contribution as 2,110. Right? Now let's deduct any other variable expenses that are remaining. Since we are preparing this account under marginal costing, we do not consider fixed costs here because we need to find the contribution first before going towards the net profit calculations. Take these variable expenses here. Take the values. Variable selling expense. How much? It will be 400. Right? Variable selling expense 400. Then we have variable admin expense. That is 300. Variable admin expense 300. So we need to deduct this 700 as well, the summation of these two also from the production contribution. So we can find the value of the contribution, which means sales minus cost of goods sold. Remember, I'm talking about these values again and again. Now I did put minus mark. Now I have indicated the value as a minus value as well. Therefore, what happened here? Minus minus became a plus value. Let's remove this minus. Then we will get the correct value. Right? Remember, I'm telling again and again that the contribution equation is this likewise sales minus variable cost because it is very important to you. Remember, do these questions again and again. Once I finish discussing this, try this by yourselves. Okay? Try and see whether you all can solve this. Because I will test questions like this in the examination as well. Therefore, showing these workings and having the structure properly shown is very important because now I'm teaching the structure properly. So you need to remember that as well. Now now we found the contribution under marginal costing method. Now let's deduct the fixed expenses as well because now we need to find the net profit because we are preparing the income statement, right? Now see these three fixed expenses, take those values. So what are the fixed expenses? Fixed selling expense, how much? 400. Fixed admin, 100. Fixed factory overheads, 300. Factory or manufacturing, all these things are similar, okay? Let's take the values. We have fixed selling expenses 400. Then fixed administration expenses 100. So I asked you all to fill this up before I fill. And then we have fixed manufacturing overhead as 300. Okay, now let's take the summation of these values. 400 plus 100 plus 300 is 800, correct? So did you all get the summation correctly? Now you need to deduct this as well. You need to deduct 800 and now all these expenses we have deduct. Now here also show this as a negative sign. Then we know we have to deduct these fixed expenses as well. Show it, okay? Since I didn't put brackets here, if you don't show it here, you have to show brackets, okay? If you are deducting, you have to show those within brackets, okay? Since I'm using equations here in Excel, I cannot use that. So since you are preparing those manually, put brackets here whenever you are deducting, put brackets. Okay. So what is the net profit? How did we get the net profit? We deducted all the total and variable expenses from sales. First, we deducted a cost of goods sold from sales. And then we got the other variable expenses and we deducted all the variable expenses now from the sales. Then we got the contribution. After that, we take all the fixed expenses as well and deduct all those fixed expenses from the contribution. Once you deduct the fixed expenses from contribution, you get the net profit as 610, which means 610,000, right? We are preparing the question in thousands. Is it clear? I hope it's clear to y'all. I will give you all a minute to copy the answer, right? Just think what happened, okay? Sales were given. Then we needed to deduct the cost of goods sold. But since we are preparing these accounts according to marginal costing method, we only used variable costs in inventory valuation. When we were finding out the value of the closing stock, we used variable costs. Not only that, we didn't deduct any fixed costs here. We didn't use fixed factory overhead here, right? Why is that? Because in marginal costing, first we are supposed to find the contribution. Because they think understanding about the variable cost and profit relationship or the contribution and profit relation is more important in decision making. I hope you all remember this. I mentioned this when I was discussing the TUT. Okay. Right. So now we finished the computations that we did for marginal costing method. And we got the answer net profits 610. Okay, now in the question we are supposed to prepare the income statement in both ways, marginal costing and absorption costing. Now let's prepare the income statement according to absorption costing. Okay. First, again, like the previous question, whenever we are finding the profit, it's the same, right? We take sales minus cost of goods sold, then we deduct other expenses, right? We deduct all the fixed and variable expenses, and then we get the net profit. Try to do this by yourself. Put sales and fill in whatever the details that you know how to fill correctly. Try to do it by yourselves, then I will do it. Okay. So did you all take this structure to your paper and fill whatever the values that you can fill. Sales also you can fill in the question. How much are the sales? 4,000. So let's do the question now. 4,000. I'm giving you all time because then only you all can uh, copy the structure and maybe do the question with me, or just go ahead and then see whether you all have done it correctly. Okay. Then now we are going to calculate the cost of goods sold next. To calculate the cost of goods sold, like I said, we need to get the opening stock. We don't have any opening stocks for this company. Then we need to calculate the production cost. Direct material is given there 1,200. So again, we need to find the per unit cost, okay? Same way, you need to find per unit cost. I will just copy paste this. Oh, yeah, I will copy paste this, and if there are any changes, I will change it. Because the question is the same, so I can use it. So the direct material cost will be 1,200 per unit. Cost per unit will be 1,200 divided by 1,000, the number of units produced. Then per unit direct material cost you will get as 1.2. Right? The next one, direct labor, it's given in the question, 700, right? Then per unit labor cost, how do we find? The same way, 700 divided by number of units produced, that will give you 0.7 per unit. Then you have variable factory overheads, which is 200. So to find the closing stock only, we are finding these values, okay? That's why we are finding the cost per unit. Okay, if they have given us the value of the closing stock, then we don't need this working. Sorry, we don't need this working to find per unit cost. Clear? We are doing this working part to find the value of the closing stock. Since I copy pasted, I will remove this. So variable factory overheads, okay. Then per unit cost, we found it as 0.2. What is the fixed factory overhead now? Refer your question 300. So fixed factory overhead is 300 rupees. Now here, since we are preparing the account according to absorption costing, we don't have to take variable costs only. We don't have to find the contribution. We can just find the gross profit by deducting sales from the cost of goods sold. Sorry, deducting cost, it's other way around. Deducting the cost of goods sold from sales. Right, now we have fixed overheads. Remember, these workings are very important. Show these workings in your paper because when you show the workings, even though the final answer is incorrect, we can mark and give marks to your workings if you have done those correctly. Okay, now we have fixed overheads 300. Number of units produced 1000. That will give you 0.3. Right? Now, we know per unit values of all these production costs. Right? Now, let's get the total per unit value. 1.2 plus 0.7 plus 0.2 plus 0.3. That will give you 2.4. Right? That will give you the answer 2.4. So now you just have to find the closing stock. What should you do? You need to multiply the remaining number of units of closing stocks by per unit cost, which is 2.4. So you can get the value of the closing stock. Okay, now we said closing stock we should deduct when we are finding the cost of goods sold. Okay. Sorry. So let's add these these four. Now we have four here, right? Direct material, direct labor, variable factory overheads, and fixed factory overheads, which we added because we are preparing the account according to absorption costing method. So the value of this is 2,400. That minus 240 will be 2,160. So we need to deduct the cost of goods. So this is the value of the cost of goods sold. We need to deduct the value of the cost of goods sold from sales. 4,000 minus 2,160. That will be 1,840. Okay, before moving on with the question, I have a small question for you all. So which net profit will be higher? Will there be a difference at all? And which number will get the higher value, whether in the income statement that we prepare using the marginal costing method or in the income statement that we prepare using the absorption costing method. Just think the answer for yourselves. If you get the correct answer for that thinking and referring to the last lesson, the theory bit that we did on this lesson, it will be helpful to refer those. Okay, we will do the sum, then you will see which value is higher and I will explain why that is. Then what do we have here? We have variable selling expense 400. Then we have variable administration expense 300. Fixed selling expense 400. Put these values are these things you can do by yourself. and fixed administration expense 100. Take the summation here of the other expenses, non-production expenses. What is the value? That will be 1000, sorry, that will be 1200. Now what should we do? We should deduct these other expenses from gross profit to obtain the net profit. Clear? Now let's find the net profit. 1840 minus 1200. The net profit using the absorption costing method will be 640. Now see, there is a difference, right? That is the difference. So in marginal costing method, the net profit that we get will be lesser than the net profit that we get using absorption costing method. What is the reason for that? Because of the difference that is happening in the computation of cost of goods sold. Clear? We took, when calculating the closing stock also, in absorption costing method, we took both variable costs and fixed cost. But in marginal costing method, we only use variable costs. We only deduct variable production, variable factory overheads under variable production cost. But here, we take fixed factory overhead, variable factory overhead, both under production cost. That means total factory overheads are considered here. But in marginal costing method, remember, we only used variable costs. Right? Because of the calculations that we do here, there is a difference here. Okay, now if you want a few more minutes to copy the answer and check, you can compare the income statements that we prepared using these two methods. See, you can take a note saying the profit that we obtain using absorption costing method will be higher than the marginal costing method. Due to, what is the reason? You can refer to the notes that we did previously as well. Due to the changes that occur in the computation of cost of goods sold. Right? Write this. In marginal costing method, we consider only variable costs in the computation of cost of goods sold, while absorption costing method consider all the variable and fixed factory overheads. And in the computation of the closing stock also, absorption costing method will use fixed and variable overheads when calculating the per unit value. Therefore, this difference exists. Right? I hope you all copied the answers down now and you all have a proper idea about these two methods. Okay, shall we move on to our second question? What is our second question? Someone company produces a product with the following budgeted information for the year. Now here we don't have the actual amounts. Do we have? Yes, we have actual sales with us. Other than that, these are the budgets that we have prepared. Okay, now read this question. direct materials. Remember, now here, unlike the previous question, we don't have the value. We have how much kilograms they use and how much kilograms they use per unit and the price per kilogram. Right? Per unit, how much kilograms they use and the price per kilogram. So what can we calculate from here? We can calculate the per unit direct material cost by multiplying 6 rupees by 2.5 kilograms. Okay. Then direct labor. They say 15 rupees are paid per hour and per unit they need 3 hours. To produce 1 unit, they need 3 hours. So these 3 hours, we need to find a value. So we are getting the hourly rate that they pay, which is 15 rupees. Then variable overheads, 8 rupees per hour of direct labor. Now it is directly combined with the direct labor. So they have not given us the usage separately here. As they say, it is related with the direct labor. So 8 per hour means how many hours do we need? 3 hours. So 8 into 3 will give you per unit variable overheads. Right? Then next we have fixed overheads. Here they have given us the total amount of fixed overheads. And there is a note here, absorbed per unit of production, and the budgeted number of units or the units budgeted production and sales will be 50,000. Right? In the year, production turned out to be 45,000 with 40,000 actually sold. Now remember, although they budgeted for 50,000, they have only produced 45,000 units, out of which they have sold 40,000 units. So what's the closing stock value? Here the working is given. What's the closing stock value? So the closing stock value will be, let me prepare that here. How are we supposed to find the value of the closing? So, sorry, the number of units produced as a closing stock, remaining number of units. They say the production is 45 units that year, 45,000, and sales 40,000. If we produce 45,000 units and we sell 40,000 units from that 45,000, then how much remaining? 5,000, right? So first, before moving on with the question, we need to find the number of units remaining, closing stock. Right? Because now here we are supposed to, the question, remember what they expect us to do. Now here they are expecting us to do the valuation, find the value of the closing stock using both methods, marginal costing method and absorption costing method. Right now we found the closing stock 5,000. So previously also we discussed, whenever we are finding the closing stock, we need to find per unit production cost, right? How much we spend to produce 1 unit of that particular product. Okay. But in marginal costing, the difference is we are taking the variable production costs. We don't take any fixed production costs here, fixed costs here. So let's find out direct material cost. So let me do the working here. So you can actually, I have shown it here as well. It's okay if you show it here like this, okay? Or else you can show like this separately. So in previous sum also, I showed it here per unit values and everything. right? At the same time, since I wanted you all to learn that we can do the working separately, I did this here for your convenience. So either way you can follow and show, because at the end of the day, you need to find per unit cost to calculate the closing stocks. Okay. Now direct material cost, how much? 6 per kilogram, 2.5 kilograms per unit. So equal mark 6 per kilogram, 2.5 per kilogram. That will be 15, right? 6 into 2.5. So according to marginal costing method, the direct material will be 50, right? We are finding the variable production cost. Let's find the direct labor. What do they say here? 15 per hour, and they need 3 hours per unit. Direct labor. They say 15 per hour rate, and they need 3 hours per unit. So per unit, they have to spend 45 rupees. Okay. Next one, we have variable overheads. Variable overheads, 8 per hour of direct labor. Remember, they have given us the rate, and they say that number of hours considered in the direct labor will be similar to the number of hours that we use for variable overheads as well. So 8 into 3 equal mark 8 is the rate, into 3 means they need 3 hours. That will give you 24. Okay, now let's find out the closing stock. We need to take summation of all these 3. What's the value? 84, right? 15 plus 45 plus 24. So 84 equal mark, we have 5,000 units remaining into 84, 420,000. These workings also you can use. So now I'm doing the question with you. You can use the same way. 5,000 into 84. We know the remaining or closing stock is 5,000. We multiplied it by per unit cost 84. Hope it's clear. Now, try finding out the value of the closing stock using absorption costing method. What if you get a question like this and then you are supposed to compare and explain why there is a difference? Then you should know. I previously explained. Try to do this by yourself. Now, first 3 actually we calculated no in marginal costing method, right? Only addition will be fixed factory overheads. Okay. Just calculate and get. So direct material again will be 15. We did this, so I will quickly do those things. These are the workings for those 3, yeah? Because this is the same question. If it's a different question, then you have to calculate and find. Then here, direct labor will be 45. Variable factory overheads, how much? Here, 24. 8 into 3. 24. But here, since we are preparing, we are trying to find the value of the closing stock using absorption costing method, we cannot disregard any fixed factory overheads, right? We cannot only take variable overheads, variable costs, like we did in marginal costing method. Okay, here we need to consider the fixed factory overhead. What do they say here? Fixed overheads, 500,000 rupees absorbed per unit of production. Now they have given the condition, okay, per unit of production, it will be absorbed. Now we need to find the production. So here they have, remember, this is the criteria we have to use. It's given here in front of that value. So we should not take this 45,000 or 40,000. We have to take the value that they say here, the condition that we have been given here. So 500,000 rupees, we need to divide by the 50,000 units budgeted production. Right, it's shown here. So we'll do it separately here. fixed overheads equal 500,000 divided by 50,000, the budgeted production. That will be how much? 10, right? 500,000 divided by 50,000 will be 10. So that's the new addition that occurred when we are preparing, when we are finding out the closing stock value according to absorption costing method. So what's the value here? Now, per unit cost increased, right? Now we know if we are using absorption costing method, the per unit cost will increase if there are any fixed overheads. If there aren't any fixed overheads at all, then you will get the similar value. If not, if there are any fixed values, fixed overheads, you have to take that value here. Then your cost will increase. That's 94. Now let's find out the value of closing stock. 5,000 into 94, right? That will be 470,000. Now check here also. Which value is higher? This one, right? The closing stock that we obtained using the absorption costing method. Remember that always, if there are any fixed factory overheads, then the value will be different. Absorption costing method will have the higher valued closing stocks. Okay, copy down the answer now. Okay, now I hope that you all have copied down the answers. So what we did in today's lesson is we prepared the income statement according to marginal and absorption costing methods. In both ways, we prepared this. Then by having the income statements like this, you can compare and you can find out what's the reason for the difference. Now, I said it few times. Okay, take notes of those reasons. Then we found the value of the closing stock using both methods, marginal costing method and absorption costing method. So make sure that you all are trying these questions again and again and getting the correct answers. Practice this many times, that's all right. Take your time and do these questions again and again because these kinds of questions will be tested in the examination as well. Okay, so that is the end of our marginal costing and absorption costing lesson, which is the second lesson. So previously I explained what these are. Then today we discussed a few questions from these. We prepared income statement and also we found the value of the closing stock using both methods. Okay, so I hope you all understood this lesson clearly. We will try to discuss few more questions in seminars. So do these questions, read this very carefully. So we'll meet in the next session. Thank you very much, everyone.